Recently, I've spent a lot of time talking about investment management fees, and I've spoken extensively about how to identify these fees, what fees you're being charged in different various products that you might own, and how to identify an advisor that's charging excessive fees. One of the things I haven't spoken much about are the taxes associated with the fees that you're being charged, with a great deal of focus on how to reduce these fees that are being charged by advisors and various other financial products. I felt it necessary to give you a breakdown of the taxes that are associated with the investment management fees that you're charged. It's important to have a thorough understanding of where you'll find the additional tax deductions and where you'll find nothing but an expense that acts as an anchor to you and your portfolio's returns. So in this video, I'll be breaking down the various expenses that have tax deductions associated with them and the expenses that do not, potentially giving you an additional tax write-off at the end of the year on your tax returns, or showing you alternatives to your existing investment strategy, which may carry no deductions and with a strategy that could involve a lower tax-deductible expenses. So grab your investment statement and let's identify what fees you're being charged. Knowing what kind of fees you're being charged is the first step in knowing the tax treatment. So take some notes. Let's see if we can find you a new tax deduction to hand your CPA at the end of the year. Also, real quick, I wanted to remind you to subscribe to the Defending Your Finances YouTube channel and share our videos with anyone you might know and care about. Having an understanding about this type of information is helpful to anybody who owns any sort of investment product, as well as someone who's trying to fight to be diligent when their investments and their financial planning. Also, don't forget to click on the bell icon to be notified of our future content and be kept up to date with the ways that you can defend your finances against the industry that's built to make the most money for the companies and their executives. So I want to keep this real simple. Among the various types of investments, you'll find many different types of fees that each company and product charges, but these fees can be categorized into two basic groups: the internal expenses that are charged within certain financial products, and the fees that financial advisors charge you directly for providing investment management and financial planning services. So which ones do you have? Well, if you own mutual funds, exchange-traded funds or ETFs, annuities, UITs, REITs, REITs, or life insurance, you're being charged an internal investment expense fee. This can be found on Morningstar.com, the investment management prospectus, or on the investment fact sheet, and are normally classified as a quote sales expense or an expense ratio. These fees are usually represented as a percentage of your total money that's invested in the investment, and you'll rarely find them reflected as a line item on your investment statement. So these fees are charged by the investment company who offers the fund or other investments, and they use these fees to pay their fund managers, pay for their marketing pieces, and pay other various operating expenses. But like I said, you will not find these fees on your investment statements. And the fact that these fees are almost impossible to quantify over the course of a year, you are not allowed to write these fees off. And unfortunately, these fees are usually much higher and much more prevalent than the other set of fees that I mentioned and that I'm about to be discussing next. The other kind of fees that financial advisors and investment management firms charge are more transparent and identifiable. Fee-based financial planners and investment advisor reps of registered investment advisory firms, they're also known as RIAs, are typically classified as investment management fees or financial planning fees, and are clearly identifiable on your investment statement or even in your own checkbook. These fees are usually charged by advisors for providing investment management or financial planning solutions, and either charge a flat fee or a percentage of the investment money that you have managed for you by them. These are clearly classified as quote fees as opposed to expenses. You can look through your investment statements and identify what these fees are, quantify their amounts, and they're usually charged monthly or quarterly, so they're pretty easy to identify. Sometimes these fees will also be charged on a monthly or annual basis for an actual plan, or for specific advice in one lump sum, and these fees are usually paid for directly either by credit card or check or debit card from your checking account. These are the fees that you can deduct on your tax returns at the end of the year. They're paid directly from you for a specific reason to a specific person. If you're not deducting these fees on your tax return, you're leaving money on the table and paying too much in taxes. So make sure you're able to identify the type of fees you're paying. Here's a rule of thumb to remember. If your advisor works for a broker-dealer, the fees that you're charged are probably not deductible. And if your advisor works for an RIA, then your fees are probably tax deductible. Now, this is not always the case, but if you have a good relationship with your advisor or investment management person, give them a call and have them show you exactly what fees you're paying and who you're paying it to. Hopefully, at the end of this year, you'll have a new tax deduction that finds its way into your financial planning. As always, this is Dean with Defending Your Finances, and I want you to remember, there's nobody that has more of a vested interest in getting your financial planning done right the first time than you do. So stick with me, and I'll make sure to keep bringing you the information that few people know and almost nobody in the industry talks about. Thank you so much, take care, and God bless you and your family.